please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's do one thing now. Let's invite our alpha manager for the date. Anand Shah, Deputy CEO and Head of Investments of BNP Paribas Mutual Fund, is with us. Anand, hi, good afternoon. First of all, apologies. We had to address that breaking news that we had at that point in time. So sorry we had to keep you waiting for a bit. Your thoughts on the kind of move that we've seen? Is it irrational panic playing out right now in the market?
Hi, very good afternoon. I think again the move, as you can see, is quite diverse. Even not only last 1 to 2 weeks, but even from the beginning of the year, while the Nifty is looking up, we have been seeing correction in the mid cap and the small cap segment. So overall, the mood of the market has sort of changed, and we are very clearly seeing that people, given the macro uncertainty that exists locally and globally, people are a little more cautious than they were before in calendar year 2017. So I think this is a similar mood, except that the name of the stocks have changed, and a very recent sharp rupee depreciation is just added a little bit more in terms of volatility.
Anand, now the same question. Is this the time that you go in and buy these NBFCs, whether it's housing finance companies or some of the consumer finance names, or would you wait a while?
So I think there are 2-3 aspects. One is, obviously, if you have an ALM mismatch, which means you actually have sort of borrowed short and lent long, then obviously it will have an impact on the margins and so on the valuations also. Secondly, have you been sort of growing too rapidly, and would a rising interest rates can lead to sort of a more default of a cycle, and would you have more NPAs? So that's another question you may ask. And third is, at what valuation the NBFC has been trading, and what sort of growth is priced in, because at the higher interest rates you will also see some slowdown in the retail loans where the growth has been very stupendous. So I think I don't have one answer, but we have to look at each NBFC and say, look, whether the valuations have priced in a certain growth, whether they'll be able to achieve it, whether the Treasury has done the ALM management good enough that they will be able to pass on, their ability to pass on the rising. So the cost will increase has been not new. It's been going around for almost last 6 months. NBFCs were sort of under pressure in terms as far as equity markets is concerned, because we were looking at their cost escalating, and they might not have as much of a pricing power. So there are multiple questions to be answered before we look down and say, look, so we do have a particular NBFCs in our portfolios, and we do have certain NBFCs which we don't like fairly because of the growth expectation and the valuations at which they are trading.
Okay. Anand, the other big problem for this market has been the aggressive selling, not just in NBFCs, but even the bluest of blue chips. I mean, Kotak, for example, has fallen 15%. HDFC Bank has fallen so much. And a lot of these stocks, FI-driven stocks, have seen aggressive delivery selling. What do you think it is? It doesn't look like just a normal correction, because normal corrections in these stocks don't last beyond 5-6% and beyond, say, a month or so. This time it's been rather protracted.
So I think, again, there are 2 parts to it. One, they've been doing extremely well in the past from the fundamental perspective also. The loan growth has been great. Margins were expanding. Fee income was great. And given that the fundamentals were great and the earnings growth rate was good, people also sort of re-rated them. What I would believe has sort of changed in the last 1 month. So again, I'm repeating, what you're talking about of the bluest of the blue chips have been sort of outperforming market significantly. There has been sort of correction in the market already since the last 6 to 7 months in the mid caps and the small caps, which is a reflection of rising interest rate and others. Now coming back to the bluest of the blue chips, I think what rupee depreciation would do is the very segment, which is the retail consumption segment, on the back of which you had a sharp loan growth or a sharp consumption growth in the consumer companies or in the auto companies where the passenger vehicle growth rate was extremely good. We believe some sort of a rise in the interest rate, a rise in the auto fuel, prices will sort of trickle down to slow down the growth rate. So what now we are facing as a headwind to these companies are that they're trading at a very high valuations with a very high growth expectation, whereas that the same growth expectation might not be valid at least for a couple of months, 2 to 3 months, given that we have a headwind of rising auto fuel prices, pinching the consumer at the margin, and the rising interest cost both.
So, Anand, very quickly, I mean, as this plays out, what would you like to add in your portfolios, and where does consumer fit in? Because not only have financials taken it on the chin in this correction, even consumer stocks like Lever, or I mean, even Titan for that matter, Maruti, if you consider that a consumer play, all of them are down 7, 8, 10%.
Yes, indeed, I think it's an, as I said, this is the issue for next 3 to 5 months. And this will also pass through. There is a general inflation which the consumer can absorb over a year, though it would come a little rapidly for this point. So to that extent, we always like the companies with a very strong franchise, those who have a consumer ownership. They will indefinitely bounce back in terms of growth and in terms of profitability growth rate also. And the only problem in this market for last few months have been that, yes, these companies are great. They have a great consumer franchise. They will benefit from rural consumption and the urban consumption picking up, but the valuation is very, very high. Now, you're reaching a point where, because of a temporary slowdown expected, it's not yet slowdown, because you talk to these consumer companies, they are not facing any slowdown yet. But nevertheless, even if you assume that with a lag, this impact of a higher fuel price and a higher interest rate will lead to some consumer slowdown, but that would be, again, I believe, would be temporary. We are getting a correction which was much needed in these companies. So I don't think that this is not usual. This is normal. In cycles, these have happened in the past. We should look at the consumer companies with a strong franchise, or even the financials which have a good consumer ownership, the retail banks and the retail NBFCs. And I think at a right price and at a right time, they should be accumulated by the investors.